So you're welcome back, sir.
Okay.
So now,
Thank you, my bro.
yeah. So we have order block, right? And we have identified all our order block. After marking our structures, we identify all the order block available. Now, for us to understand a valid order block, that is going to lead us to our next stop, which is imbalance. You can ask questions as we've already watched the video on imbalance as we keep pushing ahead. Now, order block, valid, we have a lot of order block in the market. But to me, valid order block, and for some guru out there, I'm not guru, I beg. From what I learned, a valid order block are the one that has imbalance. Now, and what is imbalance? Imbalance seen as the difference between the buyers and the seller in the market. And that is why we are going to talk about the concept of supply and the concept of demand. That is going to be later in the future. It's very, very close by. Now, how do you identify imbalance in the market? But before we identify imbalance, I need to explain vividly the word imbalance. Now, in English language, we have synonyms, or yeah, synonyms like word with the same meaning thereabouts. Yeah, I guess. So now, imbalance. Some people
Yes.
call it fair value gap. So don't allow English or all the big term in forex to confuse you. In fact, if you can understand forex the way you can, because what I do is if I keep studying every day, if I'm seeing the chart or if I come across anything, if they use any scenario to illustrate it, I will break it down to a way I understand. I will animate it in a way I'm going to understand that particular explanation so that in as much I can identify it once I see it on the chart, I'm good to go. I don't want to, I don't care about any English they are trying to use there. Now, we have order block. Let me go back again. We
No
have order
problem.
block, and we've already marked out all our order block in the market. And after, aside marking out all our order block in the market, right, most of them are not valid. So what we need to do is to identify the valid one. And I said a valid order block is the one that creates an imbalance. Now, before I come to this particular area to illustrate imbalance, balance, other explanation is seen as fair value gap. Imbalance is seen as inefficiency. Some people call it inefficiency. Imbalance, some people call it unfairness. Imbalance, some people call it internal range liquidity. Now, imbalance, you need like the simple definition I give to it, aside from the synonyms or the related words that have the same meaning, I call it the differences between the buyers and the seller in the market. Now, when there's a difference between the buyer and the seller, creates the gaps, then the price movement becomes imbalance. And for the price to continue its journey, please, if you need to take note of this particular area I'm talking about, please take note. If there's any need for price to do what? To continue its movement, price must surely retrace back to balance the market. Now, that is, if there's indifferences between the buyer and the seller, we have a gap. Now, how do you identify the gap? You see this particular candle here as a wick. Here's a wick. Let me illustrate something. Here's the wick. Sure. And here's the wick opening. Here's the wick opening of this candle. And here is the wick. Here's the wick closure of this candle. And you can discover that we have a gap here. We have a gap. So we have 1, 2, 3 candle. If you are to mark the fair value gap, this is how you mark your fair value gap. From this particular week, this particular week. This is how you mark. I need to change the color of this wick to, let me change it to this color. So now we have an imbalance. And discover that simply we had the break of structure here. Let me illustrate something. Price has been coming. It's at the break of structure. Let's assume we have a break of structure here. And we have our, oh shit. We have our higher high. No, let me bring this down. No. Valid break of structure must be from a wick, the body of the candle. Now we have a break of structure here. So now, like I said, balance. Some people call it fair value gap. Some people call it inefficiency. Some people call it unfairness. And some people call it internal liquidity. Anyhow you call it, you can call it gap. And balance is created when there is differences or differences between the buyer and the seller. Then we have this gap. And this is how to mark your gap. All right. From the closure of this particular candle and the opening of the, okay, from the closure of the first candle and the opening of the third candle, you are going to mark your gap. As you can see, we have a space within. If the wick and the wick is meeting, it means we don't have gap again. Or say you're having something like this. Sorry. Where's this particular wick? Let's say wick and wick is meeting, you don't have a gap. But that particular space between this candle, or anywhere you see spaces between two candles, that is the gap. And anytime this gap is being displayed in the market, it means the market is not balanced. And for the price continue its movement, price must need to come and fill this imbalance to continue its journey. Now, let me delete this vertical line. Now, let's assume the price has been coming up, down, right? And we have a block of structure. This was the definition of order block I gave was the last that you illustrate was the last buy or sell candle that led to this particular break of structure, right? So now we have the break of structure. If we are to mark the order block, we can say, okay, this is the order block, right? Am I correct?
Yes.
It's not bad. We have this as the order block, it means we are correct. And any other block that you can see balance in that area is a valid order block zone. Because what makes your order block valid is you must create an imbalance, inefficiency. All right. That will make every order that the institutional trader placing here be valid. Hope you understand. That means price move up. As price is going up, where is my pull line? As price is going up, price will need to retrace back to fill this imbalance, to make this balance, the imbalance to be balanced, like that is to make the market that is not balanced to be balanced before it will continue its journey in the direction of the market. Do you have any question before I proceed?
No, I understand. I understand that concept. No problem.
All right,
Okay.
that is very good. So most time, if you mark the last buy or sell candle as your order block is valid, personally, this is what I do. If I'm marking my order block, the last candle that created that imbalance is my order block. Let me use this as an example. So to me, order block is not actually the last buy or sell candle. If you take it that way, it's fine. But me, that last candle that created this imbalance is my order block. So now, let's now go to our charts to identify valid order block and order block that are not valid. Now, like I said, this week is an order block, right? And another thing, I said balance are seen as liquidity, right? Imbalance are seen as internal liquidity. So anywhere there's imbalance, price we need to come and fill the imbalance. That is, price we need to come and grab the internal range liquidity before continue its movement. This particular week, just like I did on the previous class before week 12, it's an order block. If you go to 15-minute time frame, you see the last candle there, right? Is another block. Now, this particular zone is valid because we have what? Liquidity. It may not be imbalance, but we have liquidity here. We have another block here, but this is seen as inducement liquidity, IDM. We'll still talk about liquidity in the next class, in class to come. So now, this is a valid order block. And we have another order block here. Here's an order block because we have an imbalance. This is the gap. Let me just draw the gap. Just very small. We have the gap here. So this particular order block is valid. The price did not retrace back. Later in the future, as price is coming down, price will respect this order block later. Now, we have another order block here. So let me increase my chart so that you can see the screen very well. We have another block and we have an imbalance. So let me refine this order block very well. This is the order block and we have imbalance. So let me mark out the imbalance. Here's our imbalance. So let me change the color. So this particular order block is valid. And we have another order block here. Here's an order block. Here's an order block. But if you go to a lower time frame, it's already retraced back with this week. This week is a buy or sell candle on a lower time frame, 5 minutes or 15-minute time frame. It's already established, which make this particular zone not to be valid again. But it's still valid if we are trading with the supply and demand zone. Because I have a lot of people messaging me on the group that, how do you take your entry? I was expecting my price to take sweep liquidity. Because if we are to mark our Fibonacci 2 from the low to the high, this particular setup tap to our Fibonacci retracement level, and this is seen as demand zone. This is seen as demand zone, and this is the other block in our demand zone. And price came to that particular demand zone, and that is why price came up. Don't be confused. We'll come to that later in the future. But let's identify the other block. Here's another. Do you have a question?
No, but I wanted to say I'm not used to that.
Don't worry. Don't worry. You will learn everything. Don't worry. So now we have another block and we have another imbalance. So this other block is very valid. All right. We have another block here that I did not mark. Other blocks are everywhere in the market. All right. And we have an imbalance. Put that trade fair value gap. We discover that price retrace back to the imbalance, right? And start going up. All right. There's another block here. This is another block. I did not mark it. I don't want to change the color of this. Now we have another other block here, right? Here's another block again. And this particular other block creates an imbalance. Where is the imbalance? Look at the imbalance. So which make this particular zone valid zone. All right. Now, look at price did not retrace back as it's going up. Look at what price did. Price respected the zone and push up as price was coming down. But because we're on the downtrend, the sellers are in power to overrule the control of the demand and push down and break structure. So let me come again. Here's an order block. All right. Here's an order block, but did not create imbalance. To me, it's not valid. Now, you discover that we have a market shift here, right? We had a market shift here. And the reason why this price came back to this area and come back was this inducement liquidity. Here was a liquidity sweep here, and we have inducement liquidity. Inducement liquidity is seen as structural liquidity. So most time, when we come to entry setup, I'll still come to this particular area to tell you a setup here and why price retrace back from this area. That is after we've traded supply and demand. Now, let's scroll down again. Discover that price is coming down. It's an imbalance here. So which makes this particular region valid zone. And price retraced to the imbalance. As price is coming back, price fill the imbalance and continue its movement. Now, here's another valid zone. This particular week, let me shift this down. I don't want to change the color. This particular week is another block. And here's an valid zone also because we have an imbalance here. As you can see, I mark from this week to this week. We have an imbalance here. All right. Here's another valid zone. This particular week, if I'm to mark, this is our order block. Because if you go to 30 minutes or 15-minute time frame, you see the last sell candle, buy candle that led to the break of structure. This is my correct order block, right? And it's not valid because of this liquidity here. This liquidity here. Sorry, let me just call it anyhow. This liquidity here makes this order block valid. And where's our order block again? This particular order block that created imbalance. It may not be buy or sell candle, but this is the candle that creates imbalance. Make this particular setup order block valid because we have liquidity, which is the internal range liquidity, is seen as the fair value gap. Or most time, if you see me putting this chart on my charts, I used to identify that area as an imbalance using this color. So we have a good. My battery is just going down now, but let me be fast. We are very, very close by. So now we have another block here. All right. Now look at this particular week here is another block. It could be seen as a supply or a demand zone. All right. But did not create imbalance. So made it not to be valid on a 1 hour time frame. But if you go to 15 or 30-minute time frame, this is seen as an inducement liquidity. And price did what? Into that particular area. Sorry, as inducement liquidity. This is another block also. This particular week is another block. If you go to 15-minute time frame, just like I show you earlier, that is why price into this area, this other block, and sweep down. So if you go to a lower time frame, you see imbalance on a lower time frame, either 5 minutes or 15-minute time frame. That is why most time it's good to take entry on 15-minute time frame and hold your position to 1 hour time frame or possibly the 4 hour time frame. Now, cash sniper entry, you go to 5 minutes or 1 minute time frame. Now, you may discover that my chart pattern is different from the way Caleb trade. Now, the only thing I learned from Caleb is market structure and liquidity, and I also adopt that in taking some setups. Now, here's another order block, right? We have another block here, all right, and we have imbalance. Look at this imbalance from here to here. Price came to this particular imbalance and continue its move. Now, this particular GBP, JPY, USD is on a downtrend for now. Now, as you can see, the strength is weakening. There is no momentum. You know, when it was coming down, it has been creating momentum, but it came to this area and created a particular level of support. Created a particular level of support. These are things we are going to take note in the future. This price break this trend line, all right, and possibly take out this particular low, higher low, we have a market shift, the uptrend. Let's say price break, we have a market shift. But as it is now, our bias, if price do like this, we have a market shift to the uptrend. So as it is now, our bias is still on a downward trend because price is trying to build up liquidity. And to me, here is a particular zone I would like to take trade from because I see this as inducement liquidity. After price has built liquidity, let's can come and do a fake out. Sweep up this liquidity, sweep the structural liquidity, which is the inducement liquidity, do a fake out, and start selling downward. Now, I will also show you how to enter trade in a particular point of interest because all this order block, all right, and previous order block we have marked are seen as our point of interest. And you don't just take trade from your point of interest. Things you take note once you are in your point of interest. And what are the things you are to take note of when you are at your point of interest? Take note of reversal candle pattern. It is going to give you assurance and more confidence to take trade in a particular area. So to this end, I would love to tell you that order blocks are area where we look in taking trade from, which are seen as our point of interest. We trade in line with the institutional trader. And the most valuable and the most good order block are the one that creates space, gaps, imbalance, inefficiency, internal liquidity, anyhow you want to call it. These are valid order block. All right. And internal liquidity is seen as the differences between the buyers and the seller. And you discover that anywhere there's imbalance, price must surely come back to fill the imbalance and continue its movement. If it doesn't feel the imbalance as it's going up, just as it's coming down, as this price is coming down, all these are seen as liquidity. So price is sweeping all this as liquidity as it's coming down because all these are liquidity because there are a lot of pending orders that price did not come down to take. But as it's coming down, price is grabbing them as liquidity and is pushing downward. So when we come to liquidity, and we'll be focusing on GBP and USD and Euro USD for this our class. So as price is coming down, price we need to grab liquidity to continue its movement and momentum. But currently now, price momentum is weak. I want to show you something.